using zones for top-down analysis on gold. All right, good morning, everyone. I'm TGFX. So let's talk about gold, how I trade gold, and what my view is currently on gold. So this is a new week. Today is Monday. So on gold, I'm not going to waste much of our time trading gold now. I start from the weekly time frame, the daily, 4 hours, and 1 hour is the last, then 15 minutes for entry. So now on the weekly, let's move to the weekly. So what are we seeing on the weekly? So the weekly is where I mark out my zones, like the zones where the market is turning from, or resistance zones, current resistance zone, not the far away ones. So what are the things I look out for when trading? This is my strategy. I look out for the trend of the market, that's the structure of the market, and let's write out things I look out for when trading this strategy. One, you have to look out for trend. Two, you have to look out for support. Support and resistance. Support and resistance. The support and resistance is on the weekly. It's on the weekly time frame. That's this is why I call it support and resistance, because actually I'm looking for support and resistance. But this is why I specifically name this one support and resistance on the weekly, is because that's where the way I mark support and resistance on 1 hour, 4 hours is quite different from the weekly. So this weekly is just for you to know the turning current resistance zone on the weekly, so you can have an idea of what the market is doing. Then we look out for NTZ, like NTP. So the meaning of NTP is this is the meaning of NTP. NTP means normal turning point in the market. That's normal turning point, then zone in the market. Normal turning point zone in the market. So that's what we mean by NTP. I'm talking about NTP, I'm talking about the normal turning point zone in the market. So these are the three things I look out for. So the NTP is actually where I see my trade. Then I have another one called one candlestick turning point. The one candlestick turning point, I will explain that later. Oh no, I'm using my phone to do this analysis, that's why it's like this. I don't have time for the laptop for now. So we have the OCTP, which means one candle stick, turning point. So these are the things I look out for. The reason why I have the OTCP, this one candlestick turning point, is only for daily time frame. You only use it for weekly. The one candlestick turning point is is only for, I'll use W for weekly and D for daily, So now you can see, I don't know if you can see this. So the OTCP, that's one candlestick turning point, is only for weekly and daily. I don't use it for 1 hour and the rest. I don't use it for the lower time, for 1 hour and daily. I don't use it for it. So don't worry. With time I will make a video showing all this, explaining that very well, the one candlestick turning point and the normal turning point. So now let's look at this now. So on the weekly, what do we see? We can see that the market is bullish. Do you understand? And this is a zone here. This is a resistance that market has broken. So we are marking from the body of the candle, the body, not the wicks. So this is the weekly. So let's name it weekly so we can, for easy identification. So I use the weekly just for direction sake, not for entry. When market comes to the weekly, there's a way I look for confirmation. That will be discussed later. So now, after this, what else? What other zone do you see again? You can see there's a turning point here. You can see this market pushed up with green, then closed with red candle. That's there that the market failed to continue moving up. So that place will stand as a resistance. So that's what we are looking at now. So the market is actually approaching that zone. Then what do we see again? So this is an example of, let me use this to explain. This is an example of one candlestick retracement. Market pushed up with green candle, then we saw a red candle, then the normal, if it's for the normal candlestick, we'll see another red candle or green candle that did not break above the zone. Now what do we see here? We saw a green candle, a red candle, immediately next candle that appeared broke and closed above it. So this is a one candlestick retracement. So we mark from the body of the candle below. So it's only on the daily you mark, it's only on the weekly you mark from the top. As you can see, I marked the top here. You can see I marked the top here also. It's only on the weekly you can do that. Then if this candle break above this place and close, then I can now mark below. That's the low of this place. But since that did not happen, I can't mark it. So now what do we get here now? We can see this place now. Market has broken, give us a one candlestick. That's why I'm marking the low of this candle. I didn't mark the top, I only take the low because the low and the high and the low is too close. So taking this is the best. Then if you like, you can also mark out this, but market is far away from there, so no need to mark that until when market start approaching that zone. I can start considering this one candlestick here again, this one candlestick here. So now this is all we have for the weekly. Let's switch to the daily. So now what trend do you see on the daily? The market is bullish. It's pointing up. The market is bullish. So the market is still bullish. So now what are the zones? What zones are you seeing? So when you look closely, you can see that the market is pushing up. At this point here now, we have this zone here, this level. So market has tested it and market is reacting. Look at this place. Let me mark it out for you to see. You can see this zone area here. You can see the market got there and market is already reacting from there. So there's no need marking it out again because market has used that zone. Then what do we do next? What other zone can wait for this market? See, currently there's no zone to mark out on the daily. We can, let's imagine this daily candle has closed. Maybe the next day we can mark out this zone here, but for now we have no business with this. We can't mark out the low of this candle, the low of this zone. So I can't. Then okay, this is the weekly area, and you can see that this weekly zone up here, this weekly zone up here is also aligning with the daily, so they are together. So if market gets here, we can expect a short sell, and you can decide to avoid it and wait for a breakout, because this market is bullish. So now we can see that this market is actually pushing up. So now look at this. If this market approach gets to this zone, which is the weekly and also the daily zone and the weekly, they are together, so no need to mark it out. We can look for a possible reversal there, and if we fail to get a pattern there, maybe market breaks out and we start looking for more buys. So let's move to the 4 hours. What are you seeing on the 4 hours? On the 4 hours, market is bullish. It's still pushing up, though we have a bearish run here, and currently market has broken out of this place, out of this zone here. So market is strongly bullish. It's still pushing up. So what do we see now? With the look of things here, we can mark out this zone. So because the 4 hours has closed above this zone he created here with body, you can see it. So this is zone, we can possible area we can wait for this market to come back to retest on the 4 hours, which I doubt that the market will come back, but that's a zone to watch out for in future. It's a future zone. So in case this market reverse and pull back, so we expect it to come down here, then look for possible buy. So this is a normal zone. A normal zone, you can see we have, on a normal zone we have the candle closing with a green, a red, and that red, then a breakout. You see, if it is one candlestick, you have a green, a red, and immediately you see another breakout without having another one below. You see a breakout, and that's one candlestick. Let me show you an example of one candlestick. This is an example of one candlestick. This is an example of one candlestick. This is a green, a red, and immediately we have, okay, this is not even a one candlestick. This is not a one candlestick because we have a green candle which happened to be equal here. So then we have the candle, the next candle break. So this is a normal candle breakout. This is not a one candlestick. This is a one candlestick breakout. This is a one candlestick breakout. On the short time frame, like the daily, I don't really pay attention on it. If I'm to pay attention on this, I have to go to the 1 hour to see if the 1 hour is creating a normal zone. That's when I can take this. So this is a one candlestick retracement turning point. Market was pushing up, suddenly created a green candle, suddenly created a red candle, and the next green candle is supposed to be below, break it out immediately, just break out immediately. So this is a one candlestick. In this case, you are expect, if it's on the daily, you expect to mark your zone from here. So that's a one candlestick retracement. Let's go back. I don't want this video to be too long, but there's no way to be short, because this is I'm explaining strategy here. So now let's look at this. We see this market is pushing up. Then when you look at the 4 hours too, we also have a zone here. 4 hours, 1 hour, they are all aligning. Even the weekly, they all have a zone. They all closed at that point. So this area is a dangerous point to watch out for. Market might get here and sell or break it. Anything can happen. So you have to use confirmation over there. So this is actually what I'm looking out for. For now, no setup. No setup. Let's move to the 1 hour, which is the last area I pay attention to. So if you should look at the 1 hour, you see that we have a zone here. We have a zone here. You can see we have a zone here. Let me make it big. You can see the zone. A green candle, a red candle, and that green candle, making it to become a what? A normal candlestick retracement. Then what do you see? Boom, and that candle breakout. So this place is a zone we can watch out for. If the market should retrace back, if the market should pull back, we should expect the market to what? Come back to this level, to this turning point here, to this turning point for a sell, for a buy. You understand? So let's mark it out. This is H1, 1 hour. So you understand? So now if this market should pull back, we should expect it to come here, give us pattern on 15 minutes, then we keep buying. Then let's see if there's a zone that this market will approach and sell. Now look at, you can see this zone. This is a likely zone that this market might approach and sell. But in using previous zones, I tried doing this on previous zones. You can see there's a zone here. If you should want to mark it out, we have a red candle, a green, and immediately we have what? A red candle breaking the zone. So this is a one candle stick turning point. I'm not taking this zone. The next zone we are seeing is what? The next zone we are seeing a red, a green, and a red candle breaking out. So definitely this is a zone to watch out for. But I'm not going to take this zone because this is an old zone. So what do? I will check the 4 hours to know if 4 hours is having a red or green, a zone there. Like if 4 hours is creating a zone. So on 4 hours, you can say this place is clean. There's no zone. So definitely I will ignore it. So what do? I move to the next place. This is another zone to watch out for. This is another zone. So let's check the 4 hours. On the 4 hours, you can see we didn't even have a zone there, but it's closer to this zone up here. So since it's closer to this zone up here, you might decide to use it or wait for this zone. So definitely I will preferably wait for this zone here, though this one is closer to the zone, but I'll preferably wait for this zone up here for a sell. So definitely this is what I'll be watching out for. This is what I'll be watching out for. So this is how I do my analysis. So I'll create time to explain my zone, how I pick my zone, like create the one candle. I'll create time to explain the NTP zone and the OCTP zone, which is the one candlestick retracement and the normal turning point retracement. So this is what I'm looking out for. Let this market pull back here. Then on 15 minutes, if I'm to look for zone, I look for tweezer bottom. Tweezer bottom. You know what is tweezer bottom? Let me go to 15 minutes and show an example of tweezer bottom. So this is an example of tweezer bottom. You can see this is an example of tweezer bottom. A red candle, immediately creating equal bottom. You see a green candle coming up again, almost covering the candle or at least half of the candle or equal to the candle. Then you wait for a candlestick to pull back. As soon as it's pushing up, you take your entry. That's its tweezer bottom. So as soon as this market pulls back from here to this point, so you can look for what? A pattern here, a tweezer bottom, or you wait for market to come back and break the structure, then come back again, then you can now buy. So it's either you wait for a tweezer bottom or you wait for something like this. So this is what we are waiting for. That's if the market will pull back to that level. And if the market fails to pull back to that level, then we'll wait for the market to what? Push up to this point. Push up to this point. Then do what? Once the market push up to this point, once the market push up to that point, we either wait for a tweezer bottom or wait for this. I won't wait for a tweezer bottom because this market is strongly bullish, so I want it to create structure. So I want to create this similar structure down here, break it. I don't know why this thing is not, it's not marking. Create similar structure, break it, and retest, then sell. Just similar structure down there. So that's actually what I'll be watching out for. So guys, this is the end of the class for today. So this is just how I do my analysis. So we can